Good morning, folks. This is Price Headley. I wasn't hearing Jim either, but I hope that you're hearing me. Let me know if I'm coming in loud and clear. I had to reboot my computer here. We're going to cover the major markets. Okay, glad to know you're coming in here. I'm had to reboot my machine, so it's coming up here. But basically, wanted to ask you, what are you trading? Are you trading stocks, options, futures? uh, ETF, Forex. Tell me about what you like to trade, and if you have any favorite stocks. I see we got some stock traders there with Helen and Dave, and good to see you, Freddie, doing a little bit of everything there. Uh, EJ, good to see you from Naples in the oil trade. So mostly stocks. That's mostly what I do. Is I do a lot of stock analysis at BigTrends.com, and then I will turn that into option trades because I'm like, well, I'm going to only be in probably as a swing trade. And by the way, what kind of a trader are you? A day trader, swing trader over multiple days, or a position trader over multiple weeks? Type that in for me too while we're getting everything back up here, and give me a little flavor on what we got. So mostly swing trading. That tends to be pretty popular these days. A little day trading. You can use what I'm sharing with you on an intraday chart. We're going to mainly focus on the daily chart here today. I need to screen share here, so let me go ahead and start my screen sharing while we're getting your feedback in here. But basically, um, yeah, it's for me, it's about swing trading, taking advantage of the volatility that the markets are giving us, which is a great trading environment as far as I'm concerned, as long as you are flexible and know how to hop in, hop out, define your risk, and define where there's opportunity to really take advantage of these big trend moves. Yeah, so you can see my last couple of workspaces are popping up right now as we speak here. So I'll be up here in just a sec. So basically, what I'm going to walk you through is the big trends methodology of, first of all, get on the right side of the major trend. Do not fight the big trend. As you know, for the most part on the longer term daily chart, and frankly for the last 10 plus years, the market's been in a pretty dramatic uptrend, right? We've had our occasional blips, and you need to be prepared so you don't get caught in the face of one of those. But essentially, it's about getting yourself in tune with the overall uptrend, and then finding good, relatively low risk entry areas to put the trade on. If you're not right, get out quickly. If you're right, use the power and leverage of options to take advantage of that. That's what I do. You can do it however you like. So basically, what I'm going to walk you through here is what my daily chart is. My last window coming up here. My daily charts are showing, and then what I'll do also is I'll do a lightning round a few minutes before the open here to see a few different stocks that you might want to pop in. So if you have a favorite stock you like to trade, go ahead and type it in the chat box now as well, and I will definitely seek to get that covered too once you know a little bit more about what I'm looking for. So here we go, coming on up here. By the way, what's popping up here first I look at even things like an option chart. So this is like an option chart of something that I was kind of trading in and out of over the last few days on the S&P in the money April options that are expiring at the close today. I'm not in that trade anymore, but basically kind of in and out. It's been a pretty profitable week, kind of using the short term assessment of what I do against the longer term trend. Now, if you look at the longer term trend on the S&P, let me explain to you what's driving these buy and sell arrows on my TradeStation platform here. This is the we got the SPY chart. We've got my acceleration bands on the top panel in purple. We've got classic Bollinger Bands, the 20-day Bollingers with 2 deviations in the light blue and light and red lines against a 200-day average in yellow. As you know, we'd broken that 200-day average back there in the fall and late last year, and of course caught some nice quick downtrend opportunities. And the trends are driven by, in this particular indicator, the Williams percent R indicator, the big trends way, which is I use a 30 bar Williams percent range indicator. You can get percent R right there on your TradeStation platform. And then I use a positive scale from 0 to plus 100, and I look for something that goes in the top 20% of its readings, and then I look for it to keep going up. That tells me the institutions are acquiring. It's not the top of the range. Actually, it's the start of a new trend. See, we had one of those back there late January. Another in and out one that didn't result in much. It's pretty flat trade there in the middle of March. But then, more recently, yet another breakout and then confirmation to buy here at about 286 and 3/4. We're hovering around 290 right now on the spot. We've had a couple of volatile days where we gapped up each of the last couple of days and then failed at 290 essentially from that. I also look at the CCI, the Commodity Channel Index, in yellow. It's also backing up this trend. You can also see the bottom panel is the directional movement lines with the green ADX. That green ADX going up, that's an example of something, yes, that we want to ride that kind of a directional uptrend and take advantage of that. So, and of course, if you look at the major indexes, the QQQs have been leading. The Nasdaq's been, as you know, pushed to a new high above its early October high yesterday on the Nasdaq Composite. Part of that's been driven by, the comeback in Apple. Apple has had this deal this week with Qualcomm, had a nice pop yesterday on that, and it's been in the uptrend. I was telling people when it backed off of 200, don't panic, it's still bullish. It's just kind of coming at it from under these bands. Those bands act as some resistance. Right now, this upper band for me is 204 and a quarter. So that 205-ish area is probably going to be a little bit tough for Apple in the short term. That helps set your targets. It also helps set, if you do option strategies like debit spreads or other kinds of spread strategies, you can define where you expect the stock to have some resistance, versus when it's blasting to the upside outside of these Bollinger and acceleration bands. That's your most directional trend phase on a day-to-day quick trade to swing trade kind of big time acceleration breakout. So nice comeback in Apple compared to, of course, our sell signal on Apple was back here in early November, 204 on its way down to the eventual exit at 152.5. So that was a beautiful, steady %R downtrend. The %R downtrends are driven by going to the bottom 20% of readings and then breaking that low on a future close. So from that perspective, there's your bearish confirmation there. It was November 5th. Then retests happen when we come back and test up into that overbought or oversold line. That's the oversold line test. Each of these test points becomes a place I reset my stop. These retest points are not only a good place for resetting your stop, they're a good point for putting on a trade at a low risk entry. So in this latest uptrend move, you saw there was a retest back there early March 7th, and it's got to close below that low. So it might trade below the next day, 172.02, then it flips back up and closes above that. So that bend but not break action is very positive for it. Now, if it breaks, then yes, you're going to get stopped out, take your profit in this case, and then you wait for the next signal, which of course for Apple happened April 4th. You're in it right here at, what is that price point? Specifically 194.79. Now we're at 203 or so. So, and of course, you want to have the ability to go find these opportunities. And I find them thanks to TradeStation's technology called Radar Screen. That's really my go-to thing that I like to look at to really drive me on any time frame, daily chart, intraday, you name it. ADX, Freddie asks, what's that? That's the average directional movement. It's this green line on the bottom panel. So like a name that I'm in right now, I've already taken a double on it. I own some calls on Las Vegas Sands. So let's show you an example of that. So for my Grand Slam trading system, which is a more aggressive system, it wants to see %R's broken out, which was the case. CCI's broken out and followed through, which is the case. And that ADX line's headed up and crossing up here. You want to see all three legs of that stool working. So I got a buy signal on LVS here around 65 bucks. Now they just had earnings last night. It's at 69. It was about 70 in the after hours last night. So I think it'll probably test up to 70. But when that was happening, I was buying out of the money calls on LVS. And as it popped up here day before yesterday, popped up to 68, I made a double on some out of the money 72.5 calls out in May. And so that 3-point move in LVS, which is about a 5% move for the stock, was good for a 100% move in the option. So that's the leverage of options, but that's the best pattern of ADX. When ADX is just going steadily up, and that's the average directional movement, and then the positive directional movement in blue is above the red negative. That's a very bullish trend. And then we're back above the long-term moving average, of course, too. So that was an example of a trade that I made here in the last couple of weeks that's come to fruition nicely, and I'll likely be booking profits on the rest up around 70 bucks on a hopefully continuation of the earnings trade. Now, I want to talk about the radar screen technology because this is powerful stuff. If you don't have radar screen enabled on your trading apps in TradeStation, you should contact them. Jim can get you more information about who to call to get that set up. It's well worth it to me to have this every day. It gets you armed for trading and frankly allows you to focus. You're not so reactive to everything else. So radar screen pops up this essentially table here where you don't just plot in a bunch of names here. I've got all the weekly optionables here, about 450 weekly optionable names of stocks that trade options every week. But it's got my indicators in here. So this is our toolkit for TradeStation that we use, the Big Trends toolkit, where I can go scan for those percentile opportunities and show what are the next fresh buy signals. The green ones at the close yesterday were ones that were giving buys. If they're already grayed out in the percentile top, you can see Microsoft's been up in the top few percentiles. It's been acting great. Already been in and out of that one myself, but basically it's still overbought. So the next time I would buy it is when it comes back under the 80 level for what we call a retest. We'll look at that next. We see all the green ones here. Of course, you know that like Pepsi had already been bullish, had the big gap up on earnings. We made a double on it for our Big Trends earnings subscribers that like to trade earnings. CME Group, the futures exchange, is you can see going into a buy signal there. So you can see that the financials, XLF ETF, went bullish day before yesterday's close. You can see this Dollar Tree. So you get a feel for JP Morgan is now bull confirmed at the close yesterday, and fits with the financials, right? So you start to get some flavor about sectors that are working like financials. You can see a variety of those that are popping up here. You see also Nike is bull confirmed at the close yesterday, so was Deere. So we get some setups there for new breakouts for momentum trades, and we use the other indicators to filter that. The ones that are going red under that 80% line are ones that could be buy the dip opportunities. Like AT&T has been pretty strong and then had a dip retest yesterday. So around 32 bucks or just under, looks like it should be a support level there for that one. And you can go look at all these charts and see if any of them really interest you, pop to you, and see where you can get good low risk entry. So one that I've been doing well with lately was Starbucks. We saw Starbucks got kind of knocked back down over the last couple of sessions. That pullback yesterday was a bull retest. Here it is, up about 36 cents in the pre-market. So 75 bucks, pretty good support level. So different things to pay attention to. What about the bear side? So we look at the bear side, we'd say, okay, bearishly, let's go rescan. We got to get up to the top of our list. Then I'm going to flip %R bear upside down here. This current bar on a daily chart interval means as of yesterday's close. Once we start trading today, the current bar will be today's action, which of course won't be official on a daily chart until the end of the day. But it gives you an early kind of heads up look. So like yellow, by the way, means it's just setting up. So like Nectar Therapeutics just setting up for a potential bear trade if it closes today below yesterday's low. Same thing with Vertex, VCell. You got some biotech names. Eli Lilly already bear confirmed, LLY. You can see Fitbit, it's pretty low dollar, but it's bear confirmed. So you can gold bear confirmed GLD the other day, day before yesterday. Some of these like UNG have just already been on bear trends. Merck's already been on a bear trend. So the real laggard in the market has been healthcare, and obviously some biotech in there too. So that again shows you which side you should be on, where you should be focused. And so that then leads us into starting to look at the charts with some awareness about, okay, let's just take a look at a few of those real quick, and then I'll look at some of yours. So if I looked at the healthcare names like Lilly, LLY, you say, okay, well, Lilly really getting whacked, right? I mean, so you see, it gave the setup here a few days before, and then it closed below that low. So it was saying get short on yesterday's open at 120. It dropped to 116.5 in a day. The 200 days, the only problem with this chart is that longer term, there's support around 112. So you've got to be a little bit careful. There's also some secondary support, looks like around 114, 114.5. So probably down between 115 to 114.5, I'd be starting to liquidate some of my position. You see right now in the pre-open, it looks like it's not telling us a whole lot about where it's going to open. Maybe down a hair if you go by the middle of that spread, but about where we were. Compare that to Merck, MRK, and that one really got whacked the last couple days. And that one signaled before Lilly. Lilly was short yesterday's open. Merck was short back on Tuesday's open, the day before. And you can see there's the acceleration breakdown as well. So we're getting two close underneath that. So that one was short at 79, and in 2 days it went to 73, 92. So it's called 74. So you go from 79 to 74 on a stock like Merck, and of course the 200-day is down here right nearby, 73.5. So you'd have been booking a lot of your profits, getting close to that level. 73 3/4 was the low yesterday. But if you're looking at an option on Merck, like let's just say that you were looking at the May options, which had about a month ago, 0517, and you were looking at say a 90 put back when we got the bear signal day before yesterday. Unfortunately, these options don't look like they trade a whole lot. So let's talk about another one. But how about even just for sake of the more speculative crowd out there, the ones that were expiring in a couple of days, those options you can see have really surged. They were down here. Um, I mean, they by definition, a Merck 90 put when the stock was trading at the that's fine. It's not. I need to look at an 80 put. The 80 put. Let's look at the 80 put here. In most people like to trade near the money options, not in the money options, which is fine. So the 80 put is the one we want to look at. So there it is. Day before on the open right there, $2.18. Yesterday closes at 6.15, a near tripler. So and you can see the same patterns happening on things like ADX, which is starting to trend here, even when it was in the $1.50 to $2 range for this blast through here the last couple of days. That's powerful stuff, and that's what we're after, is finding those big trends even on short time frames to take advantage of it. I had mentioned Microsoft is another name that's been very, very steady and good. And you can see it's been just kind of grinding higher on that last %R signal. But that prior one was very good. It went from 107, got as high as 121, and then exited at 117.5. So, it's been very, very good to see that leadership across the big tech names. We mentioned JP Morgan is one that was just confirming, it had earnings there a couple weeks ago, or week ago, I guess now, the gap up there last week. And you see that there's the pop, and then there's a follow through above that high, which is 111.85. We closed above yesterday, 114. So the little pullback here this morning doesn't worry me. It actually sets up that, okay, yes, there should be some support in this, probably in the 112.5 to 113 zone. So the good looking trend on ADX, pretty much everything we like to see in a fresh new upside breakout. John asked about IWM, the Russell 2000. It's been lagging compared to the other ones. And here's a case where %R did give a slight buy signal here, so we see a buy here. But look at how the CCI didn't get above its overbought plus 100 threshold. Look at how ADX is not moving up. That's why I don't just look at one indicator, one thing, because when you get the confirmation across the other indicators, it leads me to trade with a lot more confidence. So for me, I end up focusing more on these kind of confirmed indicators. Dave asked, do we look at volume on the big trends indicators? It's a good question. I've had that question a lot in the early days, especially. And my experience was that volume can help, but it also can cause you to filter out some opportunities that maybe the rest of the crowd hasn't quite caught up to yet. So that it ended up hurting my total performance because it didn't allow me to take advantage of as many signals. So basically, it's not a bad thing to look at volume. It just means that you're going to probably reduce your trade frequency a little bit because of it, which I didn't really need on that particular system. The reason I'm going back to Apple too is just a reminder that in TradeStation, pretty much everything that I look at's been tested based on these buy and sell signals, and then looking at a strategy performance report and saying, well, if you did this with Apple over the last 20 years, how would you have performed? And you saw Apple was pretty vertical there in 2005 to 2012. And then you see it had its ups and downs here, and you say, gee, that's not very good. And then you look at what's happened just in the last roughly 5 or 6 trades. Huge upside surge to new equity highs. The green dots mean new equity highs there. So while past performance is never any guarantee of future results, it means that you're watching for things that are working, and it's really been working well on Apple again here. And you can see why, because the downside big signal, then the big upside win, and now on another upside win. So at least for now, we'll see. But that's what we're after. And so you can go apply this to pretty much any sector. I'll use on names like, look at Visa. Visa's still on a buy. So this is where people get confused about the concept of overbought and thinking overbought is bad. And what I say is an overbought indicator that keeps going up, it can be very powerfully bullish because it means the institutions are accumulating. Institutions drive the market. These retests hold. It means that people are willing to buy the dips on the institutional side especially, and that keeps things made. All those trades were, Dave, were based on Apple's daily signal. So this is just a daily chart. You could do that same analysis on an intraday or a long-term monthly chart, whatever you want to do. Freddie asked about First Solar and FSLR. Nice breakout, right? You get the nice gap up, the continuation. A lot of times, what I tell people is, if you're on the outside looking in on a trade like this, I usually say wait until you get your next retest. The retests give you a chance to get in at a relatively lower risk entry area. How do you figure out what your retest is going to be? Well, if I'm telling you we've got a percent R, like 30 bar look back period, that's about 6 weeks on a daily chart. The highs here recently have been around call it $61, 61.23 officially is the high. So you take that high and then you count back from the middle of April back to the beginning of March, which would take you back about 6 weeks. And you look for the low in that period since, and you see it's about $49. 49 to 61 is about what? A 12-point range, right? So if you have a 12-point range, what's 20% off of 12 points? Can anybody tell me what's 20% of 12 points? Get you a quick math question to get your here. 20% of 12 points, of course, is 2.4 points. John B, 2.5. You're right in that right neighborhood. So if you took 2.4 to 2 points off of that 61.25 high, that would take you down the neighborhood of about just under $59, right? About 58.80 to 58.85. So that's where your retest should happen. And you see we haven't been there yet. We got to about 59.60 there 2 days ago. So I'd be waiting for that kind of a quick pullback. Now I'm going to miss some trades that just keep running without giving me a retest, but eventually they'll give me a retest. And see, all of your trading, especially when you're using leverage with options, it's so important that you get a good risk-reward ratio. So, you see a runaway name like, say, Home Depot or something, it's really breaking out here. You're saying, well, that one intraday gave you a nice retest. It doesn't quite show the retest at the close. It's about 82% of the close, but intraday it was there. So if you know the level to look for, it's another 0.40 below the close intraday. So, and it's, oh, by the way, touching right back into the acceleration band there around 198 and then exploding up here now to 206. So, and then when you choose your options, I tend to recommend choosing in the money options. It's a safer strategy compared to the at the money and out of the money. So obviously I've got different strategies for my big trends options trading alert services that we call out in real time. And if you want more information on those, of course, you can just call us at our 800 big trends number, which is 800-244-8736. Feel free to call us. We'll get you more information on how you can check out those alert services and see if that might be a fit for you and whatever type of trading you do. Quick trading, swing trading, position trading. But it's really about kind of looking at the condition of the overall markets and being ready to take advantage of the best trends up and down. Like I mentioned, gold now showing us some downside action here. It's not my favorite bear signal here because you're above the 200 days, so your best case downside is probably down around 118.5 or so right before we get to that 200 day. But it's definitely underperforming compared to the rest of the markets. And then of course the bond market been something that's been pulling back a little bit here after a monster run here last month. So that's probably the best news of all for stocks is that the bond market has outperformed expectations. That while the Fed was tightening short-term rates, they really didn't hurt long-term rates. And in fact, long-term rates have gone down quite a bit here in the last few months. So from that perspective, that's really keeping a nice prop under the equity market. So you use that tool like radar screen, like we showed you. We didn't look at any bear ones here. Let's look at a bear one or two. What we did, we looked at Merck and Lilly. Names like U.S. Steel. Tariffs are not helping the steel stocks. You can see it's breaking down still to new lows here. We mentioned Nike was shaping up favorably as well. So lots of trading ideas, lots of stuff you can work with, and just position yourself on the right side of the big trend. I know the market bell's about to ring here, so I want to make sure. Helen asked about 1 PE. We'll look at that right before we open here. Parsley Energy starting to improve a little bit. That's going to be a percent R buy above that 2065 level, which it did close above it. So it's a fresh buy. It'll show it right here. There's your buy coming right on the open there, Helen. But you've got the 200-day hanging overhead. So best pattern is going to be trading in tune with the 200-day as well, but that does show a lot of nice confirmation with a CCI. So you can maybe trade it up to 23 bucks. So have a great trading day. If you have questions, let us know. Jim says he's still having mic issues, so he'll end up just saying a good day to you as well. Have a great trading day from all the folks at Big Trends and at TradeStation, and I'll look forward to seeing you again real soon. Take care. Trade well.